Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So, question came up concerning recent trade idea, right? And what the difference is between an option hedge and an option strangle, so like a volatility strategy, right? And while they probably look pretty similar on paper, there actually is a difference, and it kind of has to do with when it's initiated, right? And also like the risk on either side. Okay, so using GE as an example because this is kind of what triggered like the question. Um, Going into earnings, okay, GE like the trade the overall trade going into the quarter was a really like a longer term swing, basically like a several month swing targeting a potential like break of a multi-year downtrend, right? So um, going into the quarter, obviously technically the stock looks pretty good, but earnings, they're a pretty significant event, and what you know what positive progress it had made over the last few months could have been ruined had the numbers disappointed and the stock got back down, right? So um, wanted some sort of hedge in case, like, again, like the stock disappointed and it gapped lower and it blew up like the trade idea, right? So you want some sort of hedge. Now, um, when I talk about an option hedge, that usually means that there's already an existing position and you're looking for some sort of protection, right? So right there, that's the main difference between a hedge and a strangle. A strangle is initiating a bullish and a bearish trade on the stock like the same day. So basically, looking for a big move in either direction, initiating that trade in the same day. A hedge is a protection-based trade on a stock that you already have an existing position, right? So in this case, the GE position was open for a few weeks, and you want some sort of downside protection in case the earnings disappointed, right? Um, Now, in terms of like the debit, in terms of the risk, I like to have the hedge at say about 25 to 30% of the overall net debit of the trade, right? So if you're looking for put hedge, it's 25 to 30% of the net debit of the call. Or if you're looking for call hedge, say you got like puts, then it's 25 to 30% of the net debit of the position, right? So the most I'd probably want to go is 50%, and that's if I'm really nervous. But usually it's right around 25 to 50%, 25 to 30% of the net debit of the current net debit of the position. And that's because, again, it's a hedge. It's not a strangle. It's not normally strangles. I like to have the risk basically even for like the bull and bear side. So I want like the calls and the puts to maybe be about 50-50 or maybe like 60-40 at most. If it's a hedge, I want that hedge to only be about 25 to 30% of the overall net debit, right? So because one position was like a June and the options went out, so let's pull them up. So like the options, so like the open position was a June, as you can see right here. So the open position was a June 11 call. It went out about like $1.40, or dollar between $1.30 and $1.40. Then in terms of like the hedge, what I was looking at was something through March. Just like the time frame is up for determination, right? And the contracts you kind of want to go at are up for determination because like how much time you pay for is going to determine the price. But in terms of the contracts, it was the March 11th because those were about 25 to 30% of the net debit of the June 19th 11 call at the time. It was like $1.30, $1.40. The March 11 strike puts were about 30 to 34 cents. All right. So that's why, like that 25 to 30% of the current net debit of the position is really kind of like the sweet spot, I think, for hedges. All right. Um, so again, there are some similarities, but it kind of comes down to when the trade is initiated. So Strangle is initiated right around the same time, the same day. Hedges are initiated as protection based on like position that's already been open for whether it's a couple days or a couple weeks, a couple months, whatever. All right. So I hope that clears things up. And if you do have any more questions about that, please don't hesitate to reach out. If you like these videos and you're looking for more information on options trading or more information on options education, please follow up with the link in the description of the video for more information on options to play. All right. Have a fantastic night, and I will talk to you all soon.